following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this, what is this, the 9th day of January 2017. Excuse me. E-minis down 3 1/4 at 22.68. This pattern is going to be absolutely so critical to this week's trading. Is this a potential double top? Is this a pattern that says that the stochastic at 82%, MACD flattening out, is going to push even higher? So that the weekly chart with very good technicals, great MACD, a very strong stochastic at 92%, that limits the downside. But what does it do to the upside? Well, we're going to find out. Here's the 120-minute chart. Made a peak F/B. It looks very much like an F at this particular point. We went to the up channel support area, held it, ran to the 9-period moving average, stopped dead. This is going to be very, very critical. Why? Let me go to the 10-minute chart if I can, right here. All right, so the 10-minute chart shows kind of a sideways move between 11 o'clock to 12 o'clock, even 1 o'clock back on the 7th of January. And here we are at about the same level, 22.68, hitting the 200-period moving average, this blue thick line right here, going towards the 9-period moving average as support at 22.67. Now it's bounced to 22.69. This is going to be very important because if the E-mini is able by 1 o'clock today to cross the 2271 area, 2270.50 was the high, which was made earlier this morning about 8:20. If it's able to cross that, there's a really good chance, and I'll explain why, that the price could move higher. The reason why, if you look at the QQQ series, this is a powerful, I said to subscribers, this is a very unusual wave count. Technically, I should say that that was a G right there with all the other indices on the 27th of December pulled back quite sharply. This should be a brand new A, but there's an alternate count in the daily. So all I have to do now is say, hey, it's 76% in the stochastic. If it gets to 80%, I have to consider that the QQQ series is going to go quite a bit higher. And it's in leg C in the weekly chart extended today, 120-minute chart. This is a leg E, getting a little bit extended, but still with very strong technicals at 93%. The reason why I say to subscribe is that we've started a short position, but I don't want to get too carried away. I'm seeing residual strength, and I'll explain. I did last week. I'll do it again here. The NYA, the New York Stock Exchange, this is a very important index. Didn't lead on Friday and today, but it did lead on Thursday. And what I mean by leading is that it's 2,000 stocks. It's had very good participation in the market. In fact, at some point, it was a leading indicator going up from the 3rd of January into the 4th of January. It actually was telling us a story. But this cup formation says that this could be a G on that doji candle of the 5th. And if so, within 2 days, no more than the end of the day today and tomorrow, you should see the NYSE, if it's going to be weak, it should go back to the 9-period moving average at about 11,178. It probably should go under 11,170. The close below that says, hey, it's starting to show some weakness here because the stochastic could deflect lower, and the MACD, the moving average, fast moving average, that green line could deflect lower. I'll be talking about these different moving averages tomorrow night when I wrap up my three-part series. What we've done so far, let's just go, let me just use this. I'll just use what we're doing. If you go to the GDX, which is the gold miners, we went long, and I've been showing the naked chart with a couple of trend lines, then the naked chart with just the notation, the Chapman wave notation, and the stochastic, the slow stochastic, which it's always imperative that it goes above 80%. That's where the textbooks say over 80% is overbought. I say nonsense. That's the worst way to look at it. Over 80% is buying pressure. You want to see it remain over 80%. As soon as it goes under, look at that, under, the price starts to fall. That's what you want to see. The MACD, the moving average convergence divergence. Look at the histogram, these vertical lines. Beautiful. Nice action. Peak B, MACD is doing well. And then you put the whole thing together, and look what we've got. Chapman wave cup formation, Chapman wave inside wedge target area, hit, bam. Left side, right side, price time match, bam, it hit that. So far, all things are on go. But when you get above a certain resistance point and you've exceeded your expectations, that's when you've got to expect some kind of negative action. You don't have to get it, but you've got to anticipate it. So today is quite important. In the gold index, if you're looking at the dollar, we use this same thing, daily chart in 4 different views, same chart. Here's the dollar, pulling back a little bit, went to a peak A, B, C, D. Now it's having that sharp pullback. It's going to be very important. There was a very nice day, or lousy day on Thursday, good day on Friday, inside day. Today didn't take out the high of Thursday of 102.52. Today's high was 102.52. Didn't take it out. And now it's pulling back. And here's the 120-minute chart. And there, the pink one, that pink line there, you look at it right there. That pink is an exponential moving average. That's the 9-period exponential moving average. And the bluey green one right there, the shorter term one, is a 7-period smooth moving average. And that's suggesting that there is a little bit of weakness even today in the dollar daily chart. So let's just go on. And what did I miss? Did I miss anything? Yes, I wanted to continue with our look at the markets. What we're looking at here is, so that was, look at the S&P, SPX.X. Oh, I always type into the wrong thing. Dollar SPX.X, there it is. Now that was a very even nicer move on Friday than the Dow. It went to 2282.10 on the 6th. Today is not a bad day. Went lower. It's sort of at the high of the day. MACD is at 83% good. Sorry, the MACD is better. It's not great because it could deflect lower. The stochastic is good at 83%. This is going to be very important because if by the end of the day the buying pressure subsides and you start to see selling pressure, we're watching this because a close below 2265 any day this week is a negative. But if there's a takeout of Friday's high of 2282.10, I have to tell you that's a very good sign. So let's go on. We're looking at the QQQ. Let's go to IWM. IWM, very weak. It's made that peak C1, C2. We're going to be talking about this tomorrow night in my webinar, how we're putting the whole package together. What do these double tops mean? What happens to gold? Because gold is acting quite well here. It is up 6.6 at 1180, going for a leg D. And leg D starts at 11,185 point. No, at 1186. What's with me today? Yeah, that's where you start to get it. I have a left side, right side price time.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I just couldn't resist this during the break, and I was just checking my email questions and other things here. I get this email and it says, it's from Lena. I'm not going to give the full name. It says, "Hi, Basil. I've been trying to reach you for the last few weeks via email, and we haven't been able to connect. I'm concerned that perhaps I've offended you with my persistence." And then in bold letters, she says, "If so, I genuinely apologize." And the bold gets taken off, and she says, "Just wanted to circle back and check if you would be interested in a pitch about," and then she tells me what business it is. And it's actually Disaster Recovery Solutions. That's all in bold. And then back to unbold, she says, "and how best we could help each other. Can we schedule a quick call anytime this week?" Bold. "If any other time slot works for you, please let me know. Thanks, Lena, account representative." Eradicate downtime. If ever. I've been trying to reach you for the last few weeks via email, and we haven't been able. We just haven't been able to connect. I'm concerned that perhaps I've offended you with my persistence. Wow. Good one, Lena. You need to go into the writing business there. So quick questions. GT wants to know about Apple. VIX in the den. Mike in the den wants to know about the VIX. Volatility index hit the 9-period moving average. 1204 is the 9-period moving average. It went to 1208. Now it's down at the lows at 1156. That's buying pressure. That's one of the reasons why I was only tiptoeing into the short side of the index that we chose. And tell you the truth, I'm looking at this and I'm saying there is a high-level consolidation that's been going on. So many people have missed this move that I think it's giving support. And at the same time, there are a lot of nervous people, and that's the reason why you get the sell-offs at 20,000. I suspect at some point we will go to 20,000. That's not the issue. The issue is if you close, not you, if the Dow closes above 20,000 for 5 out of the next 2 weeks worth of days, in other words, if it closes and actually stays there so that on the news every other day or for 2 days in a row, and then maybe not the third day, and then again later on, a few days later, the announcer, and all these guys are announcers. Have you noticed that for years and years, we've had no reporters. We've had mostly people who have been fed news, and they just read the news. Sorry about that. All right. We won't get into anything there. What I am looking at is that when the announcer on whatever news network you're looking at says the Dow closed, it must close at 20,000 and it names the figure, that happens a few times. Happens once, okay. Twice, okay. Happens a few times and then persistently over a period of a couple of weeks, there's just no way people are not going to get back into this market. So I've got to look at this and say, really serious selling for me is going to be a buying opportunity. But in the meantime, we can do some trading. We'll see what happens. The longs so far, working okay, and that's really important. Let us look at the volatility index and just say that if by the end of the day it goes below 1150, the VIX index, there's a good, below 1150, there's a good chance that the market will at least attempt to get into the high 19,900s. If all of a sudden there's a reversal that takes place, because there's a lot of mixed signals. The semis are now doing quite nicely. They're up at 72.90, but they've been doing lousy the last week or so. So this is going to be something to watch, and we'll see what happens with the gold and the dollar, because all of these things are very important. But in the meantime, looking at the volatility index, if at any point today the volatility index is able to reverse and get back into the 1170, I'd say 1185 or higher area, then this market starts on its way back down again. And that'll be a big disappointment, because it looked as if it was going to hold and that buying pressure would succeed. So if the buying pressure fails, that's not going to be good. So those are the numbers to look at. 1185 for selling pressure in the market. And anything from here down to the 1150 area, you go under 1150 and that buying pressure should start to increase. But at this point, it's good support. That's what I'm looking at. Weekly chart is suggesting that 1265 on Friday has to be achieved over and above that, really, for selling to become more persistent. In the meantime, it's rotational. All right, that was that question. Next question I got was, Gigi wants to know about Apple. Now, this is going to be very interesting. Look, Apple's broken out. It's broken above the 118.69 peak D high. Now, is this brand new leg A or is it E? Well, I'm not sure why the monthly. Let me just look at the monthly chart. There you go. Okay. The monthly chart says that we're in leg B, gray B, because it's way under the 134 high. It was made in 2015, but it is very good action, I must admit. MACD's crossing positive, well, the 9th of the month. So let's forget about the monthly right now. Let's just say so far it's good. But the weekly is important because the stochastic's at 87% and rising, and the MACD is good. So that says that I'm going to call this E/A for now. I don't really have a preference, and I don't have to, because the daily is the one that really is important. And the daily says I have to call this also brand new F, old F, or brand new A. Very important, and I'll tell you why. If this is an A, and it has to do with the QQQ series, which I said has a D, or maybe it's an A, if this is an A, we are going up for a good 2 weeks, week and a half. We're going up into the formal presidential, what do they call that? Inauguration day. Oh. And that'll be very important for many reasons. My thinking is that at this particular point, I'm going to treat this as a positive, the same as I spoke about moments ago about the New York Stock Exchange. New York Stock Exchange holding okay, it's down 31, and it's in many ways it's more of a background indicator at this particular stage, but it's saying I'm holding very well for 2,000 stocks. Let us look at the IYT, because the transportation with crude oil down, transportation average is down 58 cents at 163.18. This is the iShares Dow Jones Transportation Average Index Fund, the ETF. And it has got that pattern that I like to look at, where you've got a long declining, actually it's not a channel in this case, it still remains a cone formation. Yeah. Okay, let's make it simple. IYT at 163.18, a close above 165.50. That's 2.25 points, 2.5 points, let's say 260. A close above that, I'm very interested in seeing it because that's going to say that the IYT could start a rally. And if that rally takes it to new high, you get yourself a Dow confirmation. At this particular point, there's divergence, and that divergence is something I'm very aware of. And is what I said is part of this mixed high-level consolidation. Next question was the XLF. Let's go back to that. We always get a question about this. Yeah, it's acting okay. It's down 4 cents. My thinking here is that this arch formation is still intact, but it has stretched out a little bit to the right. And that right shoulder says, unless the XLF at 23.50 in the next 3 days takes out the low of last Thursday, I think it was, of 23.24, a close below 23 changes the scenario. You've got your H formation. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So a question about some of the cyber stocks. CYBR up $1.10 at 49.53. Yep, this is very nice action. A counter trend move, but I have to consider that it's telling us that there is action in the market in different areas. Next question was, so the IWM, is this going to be the same as last year is the question, where expect the January sell-off? I think the answer has to be in the chart itself. It has been selling off, but very mildly. It's used time more than anything else is the Russell iShares. My actual thinking, let me just look at this. I want to see if I've moved my percentage to the, oh, that's what it is. Yep, that's what it is. Okay, good. I'm back again. So the Russell 2000 held well. It's 135.52, but it is making lower lows and lower highs. And all I can say is that if it was to crack 133.50 to 133 support and with the 9-period moving averages, that'll suggest that the timeout in the IWM is going to be longer. And at this particular point, I think the upside is kind of limited. The downside is limited to the 134s. Under that, it's not limited. It starts to expand quite a bit. Just make it as simple as possible. Next question was about JP Morgan, a whole bunch of bank stocks. I'll do JP Morgan. See, JP Morgan, this is a very nice candle on the day, but you can't put it into isolation. If you look at the JP Morgan, you'll look at the MACD, the moving average convergence divergence, very negative. Stochastic, very negative. On balance, volume is very positive, and it's representing very much what's going on with the stock. I'll make it real simple. A close above 87.76, the all-time high, leg C in the weekly, but a peak D in the daily, would suggest that, yes, it's good, but it's not good enough. This is the trend line that you have to pierce, not you, JP Morgan. JP Morgan has to break above 89, and it's at 86.50, and it has to do that relatively soon. My suggestion here is if I'm just being patient. It's really hard to do. I'm being patient because I want to get the bank stocks. I want them lower down. If we miss, we miss. Big deal. There'll be another opportunity. I think that the JP Morgans, the Bank of America, which is one of the very better looking ones, ready to go to Bank of America. Click, click, there it is. Bank of America trading at 22.68 unch. This is holding much better. It's got a flag formation at 22.67. I'd like to start looking at it at 21.50 if it can get there. And that might, if it breaks under $21, then it might go deeper down. 20.71 is the 200-period moving average support in the monthly chart. I like it. How you get in, I'm not sure. Maybe, as I said last week, maybe this is just a typical kind of stock where you've got to say, I believe it's going to go higher over the coming weeks and maybe months. Therefore, I'm prepared to start a little position right now, if that's the question that you have. So, Sarah, if you, no, I'm sorry, that was Bob. Bob, if you're interested in it, you could nibble on it here. I wouldn't get carried away, but I would actually start the position saying, hey, this is absolutely not the best position. I just want to be there in case it bumps higher and goes to the 2360s, 24s, and then treats this as a base. And then I'm really stuck. This way, at least I'm in. I get a feel for the stock. If it's going to break down, I get a feel for breakdown because it goes under 2239, the low of the 29th of December. It's real trouble. All right? So that's just one of the ways to do it. Or you just have patience like I'm trying to do. Have patience here. And if it just breaks out to the upside, I'm not sure what you do. That's why I'm saying you could do that. If you play options, you could take an option, buy an in the money 2250 March or April call and just say, you know what, it's like having the stock. I'm prepared to go with the vicissitudes of the stock. And that's it. That's the best way that I can deal with that. Next question was, right there, Exxon. So ExxonMobil, taking a bit of a beating over the last week, is down at 86.83 at 167. Now, what's interesting about it, it made a peak D in the Chapman wave. I draw the rectangle formation saying that I think it's going to come back in there, and that's where I want to look at it. But this rectangle pattern is, remember in GE, we were looking at the Chapman wave 1-to-1 rectangle formation. What is that? It's all about this particular pattern right here. We saw this on the upside, and we're still on the upside. This is the schematic of the 1-to-1 with the rectangle formation here in the Dow daily. And if you look at Exxon, it's got exactly the same thing right there to the downside. And it's gone more than 1-to-1 to the downside. If you remember, we did this on General Electric way back here. I hope I've still got it drawn in. Yeah, there it is. Remember, I drew it in and I said, this pattern here is a Chapman wave inverted stalk leg and a propeller shaft 1-to-1 extension. Well, not only did it extend, it did it twice. Look, it had a second one. And this is the characteristic of this particular pattern. It can extend to the upside and the downside, just going sideways for consolidations. So let's go back to our story. We're looking at ExxonMobil, and the group itself, multinationals. What's that, OIH, or is that just oil service? Yeah, it's not, it's oil services, OIH. Oh, I just did OIH, OIS. No, you think I'm going to be able to get this? Yeah. Oil States, OIS. Oh, all right, well, I'm doing the wrong thing. But what we're looking at here is XOI. Oh, the XOI. I think it's the XOI. Let me check it out. XOI. There it is. Yeah, okay, so this is the XOI. And that's starting to pull back. And I used to have this notated. I'll do it again. A, B, C, D. E for the week, for the monthly, comes pull back. It's in leg B, high-level consolidation. And this one's, the XOI is trading at 1,267.11, down 1278, down 1%. This is the ARCA oil index. So we're looking at this, and there's that rectangle. If it's actually like the H pattern, that turns into an M pattern. But if it breaks the low, if it closes under 1,259.56, it's going deeper down. All right, so be careful here in the crude oil. Oh, I haven't done crude oil. Crude oil, there's that same pattern. That's exactly what we're looking at. I shouldn't have done that for Exxon and Chevron. It's a different category. So crude oil, remember I said stuck between the range. I drew the rectangle. It's in the rectangle. I think it's going down to the lower part of the rectangle now rather than after a peak D. And that says that you've got to be careful because a close under 52 says that it's probably going to test the low that was made on the 15th of December of 51.02. It could even just stay around here, just up and down within this little narrow channel. So let me review. Have I forgotten anything? Platinum. Somebody asked about platinum. Yeah, very strong move. A, B. This is leg A, B, C. This is leg C in a new buy mode because the stochastics at 92%. MACD is very strong. Single leg A to the upside in the weekly. And that's the pattern that we're going to be looking at. Is gold going to do the same thing? Look, very strong leg A. If this leg A in the weekly sees a high in gold above 1185.9, that's not only good for the daily, but it makes the weekly even stronger because this leg A says, I'm not at this particular point ready for a single leg A failure pattern, which I've done before. So we're going to be watching that very closely. Basil Chapman, technical conditions hour, Dow's down 34, S&P's down 350. And we will be right back. And, we've got 2 segments to go. Great. I'll talk a little bit more about my webinar tomorrow night for those of you who are still interested. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, folks, I'm looking at URA, question about Globex uranium ETF, trading at 1443. It mustn't close sharply below the high of peak D in the daily of the 12th of December, which had a high of 1435. If it does that, I'm more inclined to think of it as an E than an A. But if the stochastic at 80.91 over the next 2 days actually goes to 83 or 84%, and the MACD can go higher, then I'm saying, I think we've got a brand new buy signal, and this is going to be a buy mode, and this could go even higher. Now, the weekly chart, unless I'm mistaken, this is still leg B minus, this very first move from 2016, the January low, week of 22nd. Then it gave back almost everything in that arch formation, like an A, Eiffel Tower, up and down. And this is new leg C. So there isn't an overlapping wave. If that was a C, then there would be an overlapping wave, but it's way too low down. I would say, yeah, it could become an overlapping wave, a Chapman wave overlapping wave. This point is just a leg C, and I have to call it a gray leg C. That's really what it is, okay? But so far, very good action. If you've been long for a while, I would just stay long for a while and see how it can hold that support. And as I say, 1430. I don't know. If it goes under 1430, there's a good chance it's going to retest the 9-period moving average of 1382. Okay. Next question I had was, I did go through the VIX index, but what I wanted to do here was to go through, let's see, I wanted to show something in the IBB. IBB has been in leg D, and what it did is it had the M formation, and then it held beautifully above the low that was made back on the 7th of December, 261.65. It's above the 9-period moving average. Went to a doji, 2 doji candles Thursday and Friday in leg D, right on the 200-period moving average today, went above. I'm looking at this and I'm saying, okay, this is the iShares NASDAQ Biotech ETF. The pattern that I'm looking at suggests very strongly that at some point in 2017, it's going to break under 240. And the target will be 220 to 200. However, within the context of markets and patterns, this arch formation just seems to continue because it got smashed from 400 back in July of 2015 down to 240. And this is really a sideways breather. My thinking here, based on the chart formation, is that we've seen this pattern before. We saw it in the GLD. We've seen it when the GLD made its top back. It was September of 2011 or something. We've seen it for a while. And what we're looking, let me just double check. Yeah, I said that, but I should double check GLD. 2011, September at 185.55. You see the H pattern that becomes an M and then fails. H pattern becomes an M and then fails. And then you can get a larger arch formation, which is happening now. So I'm thinking that there's a good chance that this is the sideways motion where fund managers were just so badly bruised by something that had treated them so fantastically for so long. They can't get it off their monitors. They want to keep coming back, and every time they come back, it fails, and they go in, they go out, they go in. And they don't usually do that, but they do when they get trapped, and they get very confused. And my suspicion is that that's a sector that's just kind of done. They overspent. They've done everything wrong. They did everything right, and they did everything wrong. And now they're paying a penalty for overspending. And it's overspending in buildings, overspending in CEOs, overspending in the personnel, overspending in everything. Takeovers, the works. And that has to be dealt with in a timely fashion. And it means you're using time now rather than price. And then it'll come back to being price if it starts to break 240. And that's really what I'm thinking. And this rally to the upside has to be monitored very carefully. The GLD, I didn't finish the notation. I thought I had. What's going on here? A, B, and it hasn't made a C. Oh, I didn't, because this is what I'm using for my attendees to my course. GLD. Oh, that's GLD. GDX is what we're looking at. The GLD, look how nice it is. A, B, looks like it wants to make C just above that peak B, which would be at above 112.94, 195, 112.95 starts leg C. Look at the MACD. Sorry, this is the stochastic at 89%, very strong. MACD is still expanding, and the 120-minute chart puts it together. We did that whole bunch of work with the GLD, with the GDX, there it is, and another one that we're working on here, which the day is young. This thing has really whoopee moves that can go anywhere, which is the NG Nova Gold. And this was the worksheet that we've had on the daily, which we've used as both a purchase and as a training course that I've been giving to both my subscribers and to the attendees of the course, where we just have time to go into much greater detail. But basically what we're looking at is, look at the strong action from that crossover, the positive crossover in the slow stochastic. Look at the MACD's crossover, and look at the histogram, these vertical lines, the 0% line. Look how strong it is. This is leg B. In the daily, looking out a little bit, we made a peak C1, C2 top, double top at 5.54, and then 5.52, I think it was. Yep, 2 days later. So that's like a peak C1, C2, because it just missed making D, but all the characteristics were of a peak D. MACD turns down, stochastic turns down, even on balance turns down. And now the MACD is acting very well, and we've got this cup, the arch formation. I didn't want to make it messy, but I better put this in to show you which was working, which became a very good takeoff thing. The H formation, if there is a buy signal from the MACD and the stochastic, that H pattern, if the pattern then breaks out and takes out the high, in this case 448 on a closing basis, that is very positive. And this is what we're looking at. So on a daily basis, Nova Gold trading at 513 up 32. Remember, this thing, by the end of the day, this could be down at 510. I'm sorry, it's at 512 now. It could be down at $5 or $4.90. That's the way it works. But it's acting well now. I'm just using it as an example of what we've done. See the chap wave inside wedge, and I'll be teaching tonight again how we can use this as a target resistance line on the way down, as a target support line. And we're going to be looking at that, plus the left side, right side price, time match, and all these different things. Plus, look at this rising wedge formation. It's held beautifully, the support level, and now it's going back to the resistance. Okay, so the question is QQQ in the den. Let's see, who was it? Zita wants to know, interested in your short QQQ idea? Light? No, we're not short the QQQs. I like the QQQs. I think they're acting very well. Okay, the question is, we're short the Dow. We have a small position short. We haven't gotten big or anything. This is still the feeling process, because you're so close to 20,000 like a magnet. I don't want to be in the wrong place. If it goes to 20,000 and 50s, you'll see a lot of buying come in, I believe. I just think on a shorter term, we could be pulling back, and that's the way we're playing it. Now, look at this. The QQQ series, 1, 2, 3. Let me explain. It's really simple. Leg C in the monthly chart, very positive action. MACD's okay, not great at all, but it's okay. Stochastic's very strong at 92%. The MACD fast-moving average should be reflecting the price movement. This is a huge divergence. It could be a positive or a negative one, and we can talk about that. But look at the MACD and stochastic in the weekly chart. Leg C, it's confirming everything is good. This is the one that's a troublemaker. So you know what? We'll do it live here. I'll do it when we get back. I'll show you why I've got alternate accounts, etc. Basil Chapman, Tiger Technicians now. Dow's down 41, S&P's down 4. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. My producer's talking about past couple of weekend rather cold here in Florida. Past couple of nights we were in the 30s in Tampa Bay area. I said, try 0 degrees and horrible wind chill. Otherwise, bright and sunny. Chuckle. Yeah, it's actually beautiful outside. I mean, you look at it, it's fantastic. It's just very cold, that wind chill, and it was 0 degrees. And we were very lucky because when we went to Brooklyn on Saturday morning, we left very early for a change. But it was just a really quick trip. As we got into Brooklyn, it started snowing, and I went really slowly in Brooklyn because the roads weren't treated very well at all. But I read in the paper, I saw later on in the day that there was a horrible 22-car pileup on the Route 91 that I was on, just soon after we had gone by. So we were very, very lucky. Missed the snow, and then going back, the snow was done, so it was just very cold. Been very cold, yeah. Now, let's just go. I have to tell you, there is building going on blocks, not just an apartment building. There are blocks that have been taken down with monsters being put up. And right on the waterfront, you wouldn't even recognize the waterfront in Greenpoint. You can't even see to Manhattan in some cases because of the buildings that are there. I hate that when that happens, but it happens. That's how they call it progress. But what's most important is that rents have started coming down the higher levels, both here and in Portland. Let's go to Rich in Portland, Maine. Rich, how are you? Portland, not Portland, Maine. Portland, Seattle, right?
Actually, Oregon.
Washington. Oregon. Oh, it's my mistake. What am I thinking? Yep, Oregon. How are you?
Okay. That's okay. We're part of the United States still.
Oh, that's as long as you are. Very good. You'd like to look at?
SLW. You haven't talked about silver.
I haven't spoken about silver for a while, right? So
I
silver
was looking
beaten.
at SLW.
Do you have it at all?
Yes, I do.
Okay. So what I'm going to say to you is it's made a peak C. Silver wheaten trading at 20.46. Let me do this quickly. A, B, and there's your C. And I can put an up arrow, meaning that it should go to a D because it's in a buy mode. MACD is strong, stochastics at 84%. Now, what's really important about this is the pattern we're looking at. It isn't as exciting as some of the other patterns that made the V-shaped turnaround. But what's really important about this is that the 200-period moving average of 2127 looks like a magnet. More importantly, if it can get into that area, 2127, no, it needs 2210 or 2215, somewhere in that area, because that's the very ugly candle. You can see if you look at my charts, the chart of the 10th of November, where it plunged from 2359, hit 2380, and then went right down to 1996. That's the candle that you really want to see. That's going to be the big challenge for silver wheaten. But in many cases, if you look at if you're looking at the silver charts, let me just do this if you don't mind. SLV, I haven't updated it. Yes, SLV, you see, it's underneath the gap. It hasn't really filled the gap with a low of 15.87. The high so far in silver is 15.85. Missed it by 2 cents. So silver for me is a laggard. That's why I've been doing gold, because gold is leading. But the GDX is actually the strongest of any of the indicators related. And in the SLV, let me go back to your SLW, which is silver wheaten. The support is really important that silver wheaten holds 19.77 as the 9-period moving average. Let's just say 1960. If it closes under 1960, it's going to suggest that it is not in the strongest position. It's had a good move. So all I can say is stay in the position. You want to see it start leg D, but I want you to have a strong leg D. 2107 starts D. I want to see 2112, 2117, and it really needs to do it in the next 2 days. But so far, it's acting well. It isn't the best looking. So I hope that helps you, Rich.
It does. Thank you, Basil.
Thank you very much for calling. Folks, stay tuned. Great programming. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,